Hey guys, welcome to another Damilola Forex Academy teaching. In today's teaching, as usual, I'm going to be showing you guys our very beautiful multi-time frame top-down analysis. Okay, and I'm going to be using GBP JPY as our footstool today. On GBP JPY, I'm going to be showing you guys the most beautiful 1:20 risk to reward opportunity that everyone can be able to ride in, participate, and make massive profits on. And beyond this particular price action trading analysis can also be replicated on multiple pairs, multiple assets for multiple profits. Okay, so if you want content like this, share, like, and hit the subscribe button so that I keep dropping it to help you guys become profitable. Let's go, guys. We are going to begin from the monthly time frame as usual, okay? And on the monthly time frame, we are going to be talking about a recent update that we discovered on GBP JPY due to its recent movement, right? Okay, so someone might ask, why do we start from the monthly time frame? This is because the monthly time frame is the highest time frame available to us on the market, and we need the monthly time frame to be able to understand the overall structure of prices. Okay, and how do we understand the overall structure of prices? This is by what? Reading the entire monthly time frame in order for us to be able to understand where prices is at currently and where prices is going in the future and the structures that are currently running up on prices. Okay, so what is the first thing we do? The first thing we do is to identify the real-time zone where price is at. We can see that this zone right here is the real-time zone where price is at on the monthly time frame. The next thing I want to understand is to read the entire structures that brought prices to this point. What are the entire structures that brought price to this point? Okay, so we can make it slimmer or tinier a bit, then take it from, let's just take it from where our screen can contain, right? So we can see from here, we can see prices make this push to this point. We can see an exhaustion. Then prices continued by making what? Push at this point, exhaustion. Then right here, we can see prices came for the push again, went for the first exhaustion, but the first exhaustion was not able to create the lower low. Instead, prices grabbed an higher low right here, then went for the second exhaustion. Then at the second exhaustion, prices now had enough momentum to create the lower low. Okay, in similar fashion, prices did the same thing here, went for the first low right here, but the first exhaustion was not enough to create the lower low. Then what the prices do? It came for an higher low at around all of these points. Then from here, prices is now trading at the second touch of the exhaustion. Okay, so in this case, the question is what? Are we going to be having a similar information here where prices crashes to the ground level at the second touch of of the exhaustion? We all know that we all know that in a retracing market, there are bullish movements, even in a sell retracing market, okay? But before we go on to that, one thing that we can all see clearly is that prices is overall bearish, okay? And price has been bearish forever. In fact, if we want to take structures from the highest point here, this is 1975, you will see that these are still clear bearish structures of lower highs and lower lows, okay? So this has been defined that the market is clearly bearish. Okay, so this means that overall market is a sell market, okay? And overall, if you are buying, it's a retracement, because overall it's a situation like this: push in the direction of trend, buy retracement, push in the direction of trend, buy retracement, push in the direction of trend, buy retracement. Okay, so this is the understanding of structures overall, right? However, we should also remember that the 61.8 Fibonacci level ends a retracement. Okay, for example, if we bring out our Fibonacci from the highest point that prices got to here, let's make it pinpoint from the highest point that prices got to here to the low right here. Okay, so if we bring our Fibonacci, we are going to see that the first touch around the 61.8 was not enough. You can see that all of these zones are 61.8 zones. Always remember that 61.8 is a zone and not a pinpoint level, right? So even if prices trades above the 61.8 zone, just like we can see here you can see that this is 61.8 pinpoints. However, all of these structures traded above the 61.8. The first touch at 61.8 traded above, the second touch of 61.8 traded above. However, 61.8 is a zone and not a pinpoint level. This means that even though retracement sometimes might exceed beyond 61.8, but so far their retracements, they are still going to correct back into the 61.8, and this will saw on the first time here, and we also saw it at the second time right here. The first time price got to 61.8 zone, it's corrected back inside. The second time here, it's also corrected back inside. Okay, and it's also important to note that that sometimes the first touch, okay, of 61.8 might not be enough to create a lower low, just like we can see right here. So prices might need to come back to touch it for the second time to grab more bearish momentum in order to create lower low, which we can see right here. Okay, so now we have understood that 61.8 is a zone and not a pinpoint level. This means that prices can actually trade above the 61.8, but so far it's a retracement. It would not break, in this case, above the last lower high. The last lower high was right here. It would not break above the last lower high, and price will still maintain a lower high level. Okay, it will still maintain a lower high. Like you can see, this high right here is still far lower than this high right here, even though prices trade above the 61.8. Okay, so that's a very important knowledge and a very important secret that I just passed out right now. Okay, so now that that has been done, what are we saying in similar fashion right here? Okay, let's bring out our Fibonacci from the high here and take it to the low here. We are going to correct our Fibonacci to make it pinpoint. Okay, so what are we saying right here? In similar fashion, we are seeing prices trading around the 61.8 zone, and in this case, prices has even exceeded. It went above 61.8 a bit. Right now, it's trading within the 61.8. However, we are now sure, okay, and this is an updated information which I also shared with my students in the private channel. My students have exclusive access, okay, and the fastest access to all of this information and all of this knowledge. So if you want to join and be part of my students, link in the description below to have access to our powerful course and powerful updates on knowledge that we discovered on each of these pairs. Okay, now let's go back to the video. What did we see for the first time? Prices came to the resistance for the first time, and prices came around the resistance again for the second time. Okay, and at the second touch of the resistance, we can see that prices is trading a little bit below the 61.8. However, we are not going to conclude that the sellers are ready until we see a break below this higher low. Okay, let's make it pinpoint. This is the last higher low right here. Okay, until we see a break below this higher low, we are not going to conclude that the sellers are ready. Prices has to come and break this higher low. When prices does this, then we will now be like, yes. When prices got to the 61.8, what the prices do? Price now broke structure. In that case, any sell is in the direction of trend, any buy is a retracement. Direction of trend, retracement, and this price will keep going until price creates a lower low. Okay, but so far the last higher low has not been broken. This means that prices can actually still come to as much as any of these levels here, because at the end of the day, 61 points is a zone and not a pinpoint level. So price can still come to as much as any of these levels before breaking structure. Okay, it can come here before breaking structure. Remember that at the end of the day, all these levels here will still be a lower high in comparison to the previous high, which is right here. Okay, because at the end of the day, like we said, 61.8 is a zone and not a pinpoint level. So all of these zones here will still be regarded as a 61.8 zone, because 61.8 is a zone. Okay, so if it's a retracement, we know that if it trades above 61.8, it is eventually still going to come back inside. But however, this is the monthly time frame, and we want to be accurate. We want to make sure that we are entering the trade pinpoint when it is ready. Okay, so in that case, we are not going to assume that prices is ready to sell. Instead, we are just going to identify the last higher low here and wait until we see a break of structure. Eventually, when the break of structure now happens, we'll now say, yes, we are ready to sell. Let's draw to the structures. Okay, prices made push from this point. We can see the exhaustion right here. It came again for another push, again came for an exhaustion, established a bigger fractal here of push at this point, came for an exhaustion, they made a smaller fractal here of push, came to this point for an exhaustion, then pushed to the 61.8. So we can all see clearly that the last higher low still holds and the last higher low is still active. This means that for now, until we see a break of the last higher low, okay, but so far we don't see a monthly break of structure. It will mean that any break of the bullish structure sells for only a retracement to the 61.8 for a continuous push to a minimum of this resistance or even higher. Okay, but a minimum of this resistance will be our take profit. Okay, so far what price has not broken the last higher low. Okay, so that is the sentiment that we are now going to take to other time frames. The fact that what, okay, the last higher low has not been broken. Okay, this means that what, all of this sell movement right here might actually just be a retracement movement to another 61.8 level. We can see prices clearly trading at what, at around all of this 61.8 levels. Here you can see the 61.8 level that price is currently trading at. Okay, and it's very, very possible that what, that all of these movements are just beautiful movements, like we said, of push. Prices came for an exhaustion at around this point, then what, prices continued making push, exhaustion, push, exhaustion. They started a small fractal here of push, exhaustion, push, came for an exhaustion here, and it's going to come to as much as this place and even higher. Okay, so now this means that what, as far as we are concerned right now, since the last higher low is still holding, that means that what, if we are buying, it is still in the direction of trend, because the real-time structures on the monthly time frame are still bullish and the last higher low has not been violated. Okay, so this is an updated information that I'm giving everybody, okay, on GBP JPY. Okay, that's what, that let's not just assume that because price at 61.8, this means that the sellers are ready. Okay, for us to confirm that the sellers are ready, we have to see what, a break of structure. So we are going to move logically. We are going to move by what we see, not by our emotions. Okay, because the fact that prices got to 61.8 around here does not mean that it cannot still go higher to test, you know, the 61.8 properly again, because at the end of the day, 61.8 is a zone and prices can definitely trade above 61.8 only to eventually correct back inside. Okay, so now that that has been defined and that is out of the table, what are we going to do? We are now going to take this window. Okay, that is from the high right here to the last higher low right here, which will now be known as our range of focus. Okay, if you want to get your range of focus on the monthly time frame, what do? You take the last higher low, which we've defined right here, and the highest point of the chart, which we've defined right here. Then this window will now be our range of focus. Okay, and we'll keep slimming prices into range of focuses until we see a real-time trade entry opportunity. Okay, so now that that has been defined on the monthly time frame, what do? You take it to the weekly time frame in order to what, read the structures within what will now be known as our range of focus. Okay, let's read all the structures again, even from the ones we read on the monthly time frame, to have a better perspective. Okay, let's take this up a bit and let's read the structures. Okay, and let's make it slimmer so we can see every single part of the chart. So from here we can see prices make push and exhaustion here. It came here, made another push, made an exhaustion here, made a big fractal here, push and exhaustion, then made a smaller fractal here. But either or all of these movements are still push and exhaustion here, and this is a push to this monthly 61.8 level. Okay, so one thing we can see clearly is that what is that the last higher low, just like we saw in the monthly time frame, the last higher low has not been violated. Okay, and the last higher low is still very, very much active. We can see clearly, obviously, that this is the last higher low level right here. It has not been violated. So the break of this bullish structure here is only within this range of focus, that is from the high here to here. This is the only window that we are going to be concentrating on and trading on. Okay, so now let's go ahead and read the structures within this window. Yes, we saw a break of structure. We are still going to go over to the daily time frame in order to see the break of structure clearer, but every single opportunity is strictly within the confines of this window. Okay, so now let's go ahead and read the structure. So here we saw prices make push and exhaustion, came here, made push and exhaustion, came here, made a bigger fractal here, came here, made push and exhaustion, then push to this monthly 61.8 level, then a break of structure happened. However, when the break of structure happened, what did prices do? Every single structure that brought prices down, price has violated those structures, allowing us to know that price is shooting to the top. How did prices do that? These are the bearish structures that brought prices down. This is push, exhaustion, price came for a push, then prices broke structure, allowing us to know that price is coming to this level. However, we are also knowledgeable enough to know that what, after a break of structure, prices comes back for a discount before takeoff. Okay, in this case, we can see that what, prices came for the first discount here, it was not enough to send prices back. Then what did prices do? prices came back for the discount again, a double touch of the discount level for a takeoff to the top. Okay, so we see this regularly with prices, okay, where prices comes back for what? For a double touch, a double discount. Okay, so this is the movement here. We saw the break of structure only for prices to, instead of heading straight to take profit, it came back for the first discount. That was not enough. Then came back for the second discount. I remember that what we said, a double touch of the 61.8 zone shoots prices very, very strong to the top, and that is what we are expecting of prices right now. Okay, so let's bring out our Fibonacci and make use of them. So from the low right here to the high, what did prices do? Prices came to the 61.8. It traded below 61.8, yes. However, we just talked about the fact that what 61.8 is a zone and not a pinpoint level. So far it is a retracement. What is prices going to do? Price is going to correct back into the 61.8, and clearly we saw that what from here prices corrected back into the 61.8, and right now, even after prices came back for a second touch around the old 61.8 zone, price is currently back into the 61.8 again, and we are looking for a takeoff to the top. Okay, so this is clear. We saw that what all of the break of structures here, all of the break of the bullish structure, I mean, ended at the 61.8 zone. These are all of the zones that ended prices. Prices never broke the last higher low. If there was a break below the last higher low, then we would be selling prices now in the direction of trend, understanding fully well that the bears are ready. But instead, what the prices do? The entire bearish structure that brought prices down, what the prices do? Prices broke the entire structure. Has to know that what we are buying in the direction of trend. So what the prices do? Came for the first discount. It was not enough to hit prices up. It failed. Then what the prices do? Came for a second discount again. And right now, prices is ready to take off very, very strongly to the top. Okay, and this is where we are going to ride the very beautiful 1:20 plus risk to reward on this opportunity. Okay, so now that that has been defined, what are we going to do? We are going to take this window again to the daily time frame in order to just expand all the structures within this window and to, you know, read the structures even much more better. Okay, so what is going on within the daily time frame? What happened within the zone? So here we can see prices make small fractal, right? Push exhaustion, small fractal, push exhaustion, big fractals here. Okay, then after prices made all of these big fractals, what the prices do? Prices came to hit this monthly resistance level. Then what the prices, there was a break of structure. Now, after the break of structure, what did we see? We saw that prices ended the movement at around what we now know as what? As the 61.8 zone. Okay, that is where prices ended. It traded below 61.8, fine. However, all of these zones are regarded as what? As 61.8 zones. So prices ended the sell at the 61.8 zone. And when it ended the sell at the 61.8 zone, just like we read on the weekly time frame, what did prices do? Prices broke the entire bearish structure that brought it down. Let's go ahead and read the bearish structures together. Here, this is push, exhaustion, push, here, exhaustion. Then prices came for the push. At this point, it came for the exhaustion here. Then what the prices do? Made this push to this level. Remember that what? This is not a lower high. Okay, lower highs are only formed by the presence of a lower low. And we can see that what prices did not form a lower high here. So this is not a lower high. So instead, prices went and broke the last lower high here. We can see this level here. This is the last lower high that prices broke here. So after prices broke the last lower high, what do prices do? It came for a discount at 61.8 for the first time, but that was not enough to send it up. Instead, what do prices do? It came back to sit on 61.8 properly, and we are ready for a very strong takeoff to the top. So just like we saw on the weekly time frame, we can see all of these bearish structures here. The last lower high of this bearish structure got broken here. So prices broke the last lower high comfortably. Came back for the first discount. That was not enough to send it to the top. Instead, now what? Hit this level and came back for a stronger discount at the 61.8, and we are ready for a very strong takeoff to the top. So let's bring the Fibonacci out. I've also taught my students multiple uses of Fibonacci, how they can be able to tweak the Fibonacci in their favor, okay, with practical examples. Okay, if you want to learn that, I have a full course on Fibonacci that is going to allow you become an expert in the use of the Fibonacci. You can use the link in the description. Okay, so now that that has been sorted out, what did we see? We saw prices came around the 61.8 zone for the first time around here, but that was not enough to send prices to the top. Then prices now came to the 61.8 zone properly again to sit on 61.8, and right now it's ready to take off. Okay, so our job now is just what? Okay, we have been able to read the entire bearish structure, and we read it as what? Push, exhaustion, all of this push, exhaustion, all of this push, exhaustion, then this is push. Then we saw what? A clear break of structure. Came for the discount the first time, it was not enough to send it. Then what did prices do? Prices came for the discount for the second time, and this was enough, or it is enough to send it to as much as this resistance level. So our job will just right now, let's just try to secure an entry for ourselves. Okay, and this is where the beautiful 1:20 comes into play. Okay, so what are we going to do? We are now going to what? Take the structures from what? Read the structures from the new point right here, from this new high that brought prices to this level right here, which we are going to call the 61.8 PRA. PRA means potential reversal area. Okay, so we are going to read the entire bearish structure that brought prices here and see how we can tap into an opportunity by looking for what? A break of structure. So we are going to enter at an earlier price point, and what from here we are going to ride to the top here. This is going to be a very beautiful trade, riding hundreds of pips, and this is the beauty of multi-time frame analysis. With multi-time frame top-down analysis, you can be able to project hundreds of pips into the future, get an earlier price point, and ride for the most massive risk to reward. Okay, so what are we going to do? Let's read the entire structure that brought price to the 61.8 PRA here. Okay, and let's take it from this high here. So here we can see price make push and exhaustion. Okay, then we can see price make push and exhaustion. Then we can see the push. Then interesting enough, this lower high here, the last lower high here, has gotten broken on the 1 hour time frame, which we are going to get to, allowing us to know that yes, we are coming to as much as this level. The maximum thing that will happen is for prices to look for a discount somewhere, come to as much as this level for a discount, or 61 point for a discount, for us to be able to take off to the top. Okay, so now that that has been defined, what are we going to do? Let's go up to down to the 4 hour time frame in order to read the structures even more clearer. Okay, so what is going on within this 4 hour time frame? Here, from the high, we can see prices make push, exhaustion at this point, came here, made the push, came here, made the exhaustion at this point, a push here, and exhaustion here. Then this now becomes what? The last lower high, and this last lower high has clearly been violated on the 1 hour time frame, which we are going to see. Initially, the first opportunity we saw, okay, and we traded was within smaller fractals here, where price made push, exhaustion, push, exhaustion, hit this 61.8 PRA. Remember, this is the second touch of 61.8, came to an equal level here. Then what the prices now do when it came to the equal level here? Prices now what? Did what is known as what? A right inverse shoulder. Okay, it's an inverse shoulder. Then what the prices do? All of these bearish structures, prices broke the bearish structure, came back for a discount, and at this discount we bought with our stop loss at the low right here, and we bought to this level right. So we were able to take advantage of this opportunity by looking for what? A very simple break of structure, then allow the discount. A discount is what? A pullback to the 61.8, or a pullback to a previous support and resistance level, which prices did, and we rode prices to the top for a very beautiful risk to reward. Okay, so as soon as that is done, then what the prices do? Within the eye of the big fractal, prices now broke the entire structure. Okay, when price now broke the entire structure in similar fashion, what are we going to do? Our job will be what? Okay, we can see that price has broken this level. We are going to go over to the 1 hour time frame in order to see it clearly, right? But price has broken this last lower high. So our job will be what? Okay, let's identify areas of discount. Okay, so what are areas of discount that prices could get to? One, we can bring our Fibonacci from the low to the high here. And what? And this particular 61.8 level right here is a potential area that price could come to for discount. However, sometimes prices may not come to 61.8 levels. Prices may stop at what? At areas of support and resistance, which is what we can see at this point. Because at this point, we can see what? Resistance level here. This is one resistance. This is what? Another resistance as a zone. This is also what? Another resistance here. So this could just be a resistance level that prices could turn to a support level right here. Then what? Then take off to the entire top. Okay, so this is a possibility of prices. So this particular level will now be known as a 61.8 discount level. Okay, we've written this down, very beautiful. And this particular one will now be known as a resistance discount level. Okay, this is a resistance discount level. That is, prices can turn this resistance to a support, or prices can decide to stretch to as much as this 61.8 discount, turn into a support before takeoff. Okay, so but before all of that, let's go to the 1 hour time frame in order for us to see that clearly this last lower high level here has actually been violated on the 1 hour time frame, allowing us to know that prices is ready for a very beautiful takeoff. Okay, so let's see it on the 1 hour time frame. So on the 1 hour time frame, you can see it very clearly. If you switch to line charts, you can see that this was where it got broken, and this is the resistance at this point. Is the resistance pinpoint. Okay, you can see pinpoint, and it has gotten broken here on the 1 hour time frame, allowing us to know that yes, the bulls are ready to take off to the top, and we are going to be riding this very beautiful opportunity. Okay, so after prices broke the structure, we know that what is going to happen is that we are just going to wait for discount. So it's just a beautiful situation of this. Let's draw the structures together of push right here, exhaustion right here, push right here, exhaustion, push to this level, exhaustion at this level, right? Then what the prices do? Prices came towards to the entire level right here. Then what the prices do at this 61.8 PRA, it broke structure. So after breaking structure, what do you expect? We know that after a break of structure, instead of prices heading straight to take profit at the top, what does prices does? Prices gives a discount. So now the discount could be at this area of resistance which we identified, or price could actually come to this 61.8 for the discount before takeoff. Okay, so how do we identify which of these levels prices will come to? Okay, that will be done on the 1 hour time frame. So on the 1 hour time frame, what do? We are going to read the structures and identify the last lower high of prices. Okay, so without any iota of doubt, as far as now is concerned, this is the last lower high of prices, and price is currently sitting at a resistance discount. Okay, so what are the opportunities here? The beautiful opportunities are what? Are push, exhaustion at this level, push, exhaustion at this level. Then what the prices do is push to this resistance discount level, and if from here we see a break of structure and a pullback to 61.8, we are going to be buying right here and swinging it massively to the top. Okay, so now let's see what the risk reward could look like. After a break of structure, we'll bring out our Fibonacci from the low here to the high here and allow prices to come for another discount to this 61.8. Okay, and at 61.8, we'll buy pinpoint at 61.8. We'll hide our stop loss at the low right here, then we'll swing it to the top. It's going to be a very massive trade. Okay, so let's see. Remember, this is the resistance we are buying to. Okay, from here to here is going to be a very beautiful about 1:23 risk to reward. Okay, so this is massive. This is crazy. You know, this is one of those trades that we share exclusively to our students to make money from, but we just decided to just share it on our YouTube community. Okay, so this is an exclusive trade. Okay, so now that is done, if prices however does not break structure at this point and price decides to stretch to this 61.8 discount, it's going to be another beautiful situation, okay, of push, exhaustion, all of this push, maybe an exhaustion right here, and prices continues. It's also going to be very similar. Okay, when we see the break of structure, what do? We wait for discount at 61.8. Let's just assume it's going to be somewhere around here at the 61.8 discount. Yes, that is correct. Then we'll bring in our, risk to reward tool here. It's going to start from here. Then remember, we are riding to the very top. Okay, so let's see what that risk reward is going to look like. It's going to be about a 1:22 risk to reward. So either or, we've identified what our potential reversal areas, levels of discount. We've identified resistance levels of discount or 61 levels of discount. So whichever level prices chooses to break structure, we are going to get a minimum of about a 1:22 risk to reward on this particular trade, on this very beautiful GBP JPY analysis. Making money is sure on this particular trade. Okay, so if you guys want to join my mentorship group in order to have access to beautiful and massive trade opportunities like this, there's a link in the description below. Remember that we are top-down analysts, okay? And the advantage of being a top-down analyst is that you can be able to foresee multiple hundreds of pips into the future and write down hundreds of pips. This is why top-down analysis is better than just trading a single time frame. Okay, a single time frame caps you, it caps your potential, it gives you limits. While with multi top-down analysis, you can be able to foresee thousands of pips into the future and swing this particular trade opportunities. Okay, so link in the description below in order for you to register into the mentorship program, join, and make money side by side with us. So see you guys in the next teaching.